What's up guys, Steven Dexter. So today we're going to talk about a very interesting topic, and a lot of people are asking me, well, if you have a small account, and majority of people have a small account, and the account size will be under 10,000, 3,000 to 5,000, within that range, and what's the maximum profit I can make within a year, and how long it's going to take me to get to, bigger account size, 50,000, 60,000, maybe get over the PDT rules. Today I'm going to give you some simulations and give you some realistic numbers for you to understand how long it's going to take you to really get to that point. So before I start the simulation in this video, make sure to click the like button and subscribe. And also all those patterns and strategies I'm talking about, you need to be extremely disciplined. If you are breaking one rules or you're feeling tired on that day, I would suggest not to trade because it doesn't really meet the best performances. Before you follow the rules and the instruction of this video, make sure to stay extremely disciplined, and that's one of the most important things for you to achieve consistently profitable. First, let's start with the account size. So let's start with the minimum account to trade, $3,000. Now, how much am I willing to risk? How much am I willing to profit? If I have a $3,000 account, I will have about $1,000, maybe $700 pulled out for each trade, and for each trade, I'm willing to profit maybe 20% to 15% per trade. So that means $3,000 account with 20% or 30% of the account size will be $1,000. $1,000 profit from 20% to 15% will be $200 to $150 per trade. Now let's go into the frequency of the pattern. Now each year we have about 100 trades overall, and let's say you're not perfect.
They ask you how you are, you just have to say that you're fine.
And you can only catch about 50% of all those trades. So 50 trade times 200 or 150, you can profit about $10,000 within a year. Now, we haven't counted into the slowly snowball because your account size is growing and you're building your capitals. And once you get to 7,000, 6,000, you can risk more on each trade. So let's say 6,000 and 20% or 30%, you can risk about 1,800 to 1,200 per trade. And your profit will be pretty much double from how much you are profiting from 3,000. So each trade will be profiting about 300 to 150. Since we haven't counted into the snowball action, and we can add extra 100% from the original profit from that 50th trade. So 10,000 plus 10,000, that's 20,000. That's about $20,000 per year of a $3,000 account. So there's two other factors we haven't counted in. Now, number one will be out of this 50 trade, how many are you going to screw up? With all those 50 trade, what's the winning percentage of the trade? Let's say the pattern in average has about 70% winning percentage. So out of 50 trade, there's about 35 trade you can profit from. And there's about 15 trade you can maybe cut it even or take a loss from it. So let's put the worst situation, 15 of those trades that you are pretty much taking a loss every single time. So each trade you are risking about 7% of the original investment, which is $1,000, maybe $750. So that's about $70 to $100. And since we already calculated, we have 10,000 from the 50 trade, another 10,000 from the slowly growing capitals. Now let's count into the losses. 15 trade consistent loss, and we can add about extra 5,000 losses. So 20,000 minus 5,000, that's about 15,000 per year. And last, we need to add the fees and the borrow fees. So typically fees are around 5% of your overall profits, and 15% kind of come from the borrow fee or the short sale fees. So ECN, commissions, and the short sale borrow fees overall plus together will be around 15% to 20%-ish. And let's give the maximum 20%. So we have about 15,000 overall profit times about 20%. That's $3,000. So 15,000 minus $3,000, that's overall $12,000 profit in net within a year. So with a $3,000 account, you can profit about $12,000, and with a $7,000, maybe $10,000 account, you can profit about maybe $15,000 or $17,000. So that's a rough calculations of how to really grow a small account. You have to put into the factor that you will need the frequency of the pattern, how much you can gain from the pattern, and how much you are willing to risk with the pattern. And always count in the winning percentage as well, and minus all of the mistakes too. And it all comes down to how well we want to stay disciplined. So overall, growing a small account is a raw process, and 3,000 account is a very small capital. The lower capital you have, the less chance you have to screw up. So at the beginning, discipline is the number one thing for you to follow. Then once you get to the mid account size, you can risk a little bit more, but you still need to be careful with don't blow up your entire account size, don't go all in, and always stay under certain risk management, always have a maximum dollar loss. And once you get through the first year, going to the second year will be much easier since you're over PDT rules. Now we haven't counted into the PDT rules because within a year, we're only placing about 70 trades. So there's about overall 200 something trading days divided by 70. So there's going to be every trade per 3 days. PDT, you can only place about 3 to 4 trades per week. So it actually fits the perfect criteria. So you don't need to worry about PDTs. But when there's more opportunity coming in within a week, you kind of have to trade a little bit more. So once you get through the first year, and second year will be much easier. And once your account is bigger, you can afford to make mistakes as well. So that's pretty much all the calculations for how to really grow a small account within a year. Hopefully this is helpful. Before you get into this entire simulations, always track your statistics and figure out what pattern you want to trade. Always stick to 1 or 2 patterns to grow your small account. And that'll be the end of this video. Thank you very much, and I will see you guys in the next one.